When we read modern economics textbooks, we're taught that the global financial system was created by governments, shaped by laws, and managed by central banks. But the real story goes much deeper. Long before states and institutions existed, money moved through hidden networks of merchants, families, and personal relationships. In the ancient world, there were no central banks, no stock exchanges, and no stable currencies. Trade was risky, and sending money across borders depended entirely on trust, not laws. That's why early financial networks were built on identity and belonging, shared language, customs, and loyalty. Those who belonged to strong networks could trade safely. Those who didn't were exposed and vulnerable. Among the earliest of these networks were Jewish merchant communities who connected the Christian and Muslim worlds and created early credit systems based on letters and family ties. In the Mediterranean, cities like Venice and Genoa developed advanced financial tools resembling early banks and investment platforms. In the north, the Hanseatic League operated like a multinational corporation long before the idea existed. Across the east, Armenian merchants built a vast web stretching from Europe to India and China, powered by family loyalty and multilingual communication. Then came the Knights Templar, who created one of the first international banking systems through deposits and letters of credit. Later, powerful banking families like the Medici and Fuggers financed kings, wars, and even popes. Behind the scenes, networks like the Jesuits and Freemasons spread information and shaped early economic cooperation. Then came the Rothschilds, who perfected these older methods. They built Europe's fastest private communication network, allowing them to receive news before governments and coordinate their branches across capitals like a single financial machine. Eventually, governments created modern institutions, central banks, stock markets, and bond systems. But the older private networks didn't disappear. They merged into the system and continue to operate beneath the surface. Even today, during every major financial crisis, from 2008 to the Eurozone crisis, it is private relationships, back-channel negotiations, and trusted networks that stabilize the system, not formal rules. The main lesson? Behind every major financial institution lies an invisible network of trust, information, and influence. The global financial system looks orderly, but it still runs on the same logic that shaped ancient networks moving in the shadows. And the question remains, do institutions run the world, or the networks hiding behind them?